Hey, today is May 1st, 2019. We've had the Fed press conference, and we've had the post-Fed sell-off. If it's going to continue on tomorrow, then we have perhaps begun our whole plan that we have been waiting for to put into action, which was, a 90 to 100 point pullback off of whatever high we make. And today we made a new all-time high, but we failed to make a new closing high to go with it. Once we lost yesterday's close, um, we knew that it was better to be short than to be long below here. We kind of traded down below it a couple times before the Fed came on, and then bounced back up to it, and we made this new high. But then by the time the press conference was ready to get started, sellers already started to move in. We lost this 29.45 level. Once we lost that, we had to start looking down here to, maybe this 29.40 would hold for us, which is the old all-time high that we finally took out this week. No, that wasn't good enough. The last chance for us to really form a good line in the sand was here at the bottom of the body of yesterday's candle. Because once we traded down below this at 29.37, we started into an outside reversal day. And you can see that the length of the candle had nearly doubled itself on down from there. And this close is really damaging because we had made this effort back here on the 23rd of April when we traded up out of this, out of this resistance that we had been sort of trapped under. We traded through this final gap left over from 2018 and closed outside of it. And ever since, we have not closed back inside this gap. So that was that 29, 25, 51 level that I kept tweeting about and that I have been talking about for the last couple of weeks. And not only did we close back down below inside that gap, but we also closed below the 10-day simple moving average. And going back through the chart here, we haven't seen a close below the 10-day simple moving average. Following the blue line here, we have not seen a close below it since back here, the end of March, when we had this little 80-point sell-off, and this was all centered around the Fed, I think. I have to go back and look at the dates for sure, but I think this was all centered. No, actually, this was the Fed over here. But anyway, I don't want to get sidetracked. But in any case, the last time we closed underneath the 10-day simple moving average was this little sell-off here. And so probably what we're going to end up doing then is, either we're just going to follow through a little bit tomorrow to the downside and maybe hold the 20-day and reverse off of this, or we're going to go ahead and do our whole 90 to 100 point, sell off. And if that is the case, from 29.54.13, 100 points off of that would be, a nice, perfect, juicy back test of the March closing high, the Q1 closing high set on March 21st. If we just do about 90 points off of that, then maybe we would hold above the Q1 high at 28.60. If we're going to go a little more than 100 points, then maybe what we're going to be looking at instead is a full test of the whole range of Q2. And here's our Q2 open with this huge gap underneath a golden cross of the 50 and the 200 day. Okay, so I'm just skeptical. I'm only skeptical because of, that what I found about the last Fed meeting where we had kind of a nasty afternoon, and the next day we came in and reversed the whole thing out. And then on Friday we came in again and reversed the whole thing out one more time. So if anybody was like away from their desk, who's a good big player in this market or wasn't trading this, is pissed that the selling got this out of hand, we will reverse quite a bit of this out tomorrow. And then maybe on Friday, if that non-farm payrolls number is spooky in any way, shape, or form, then we continue the selling. If everybody who matters is already in on this sell-off, then we're going to follow through with it tomorrow, and we should be looking for a break of the 20-day simple moving average as our next target down. Okay, I just wanted to kind of remind you where we're at and everything and how things are going. And one other thing I want to kind of highlight is that we have a couple of really interesting halfway backs right now, and they could offer us a midpoint sort of bounce that we could get and maybe chop around for a little bit. and that's right here at 28.99 and 29.01. These are the halfway backs for April and the halfway back for the quarter. Since we made a little bit higher high today, we can put a new halfway back on here as well, and it's it's right there in line with the halfway back for the month of April. So 28.99 to 29.01. Maybe we sell off on down to there and mess around for a few days, kind of getting everybody to believe that there's no way we're going to close below 2,900, only to come in and then flush it on out and get that second half of our sell-off on down to maybe 28.50 to 28.60 for that full 100 points off of this high. There is still that all-time high that was set overnight last night at ES as well, and I don't like that. I mean, I don't like being wrong, knowing that that was going on, because that's just not healthy behavior. But at the same time, being short and being overly confident about being short while there's a potential reversal and new all-time high just to resolve that in the works is not a good feeling either. That's why I really did not want to be buying any puts or investing any, putting any money to work in very expensive puts unless we would initially at least break down below 29.45. So hopefully you got a good put entry today and you were following the tweets and the tweets made sense, and I was able to help you make some good decisions today. If not, hopefully this video will help you tomorrow. Anyway, have a great rest of your evening as always. Good luck and good trading.